turns around, and the trade war gets too tense, and we end up with a Chinese government opting to ignore U.S. sanctions on Iran. I think that's a major risk, which would be probably sending the trade war to a whole new level. But certainly we've seen no intention of de-escalating for the time being. I mean, I think there's pressure on both sides to get to a deal, but that's why we're so focused on what's going on in trade.
But the Permian, the production just keeps increasing, and it's not going to stop anytime soon, is it?
Well, that's a U.S. story. But
it's a global story too, particularly as exports increase.
Well, so the U.S. production growth has been slowing down a little bit on the margin. Remember, the rig count is down by more than 10% since the beginning of the year, and all of this is reflecting a lot of pressure on the sector to deliver dividends and share buybacks. We were talking about share buybacks in the prior segment. Energy has to come in and start buying shares back, and that's what the investors are asking companies to do, which eventually will slow down the rate of production growth. But the biggest issue this year is that we've lost Iran. I mean, Iran's the fourth largest producer in the world. Back 3 years ago, now they are basically unable to export.
Anything to be made of different commodity, but LNG, which I think hit an all-time global low of 390 an MMBTU on Monday. I mean, we're talking something that used to trade as high as $12 to $15.
Yeah, I mean, we've seen LNG trading at $21 a barrel in very cold winters in Asia. So there's a couple of things going on. First is that we're at a low point from a seasonal level when it comes to demand. Remember, 90% of the world lives in the northern hemisphere, so everybody wants gas in the winter. LNG is a very volatile commodity in that regard. But the other issue that's been going on is we've expanded exports out of the U.S. pretty dramatically in recent years, also out of Australia. And again, China has basically tariffed U.S. LNG imports. So they're slowing down their imports of LNG. I mean, like I said, this trade war is affecting all commodity markets: copper, aluminum, LNG, soybeans, oil, you name it. There are just different forces at work in each market.
So what about gold? Have you had to raise your target as we've seen
We've raised our target, and there's three things going on in gold. First of all is that rates globally are collapsing, as you know. We have $14 trillion worth of sovereign debt in delivering negative yields, right? So that's naturally pulling people into gold. Second thing that's going on, central banks are very distrustful of each other, and they continue to buy gold for their own reserves. So, and the third thing going on in gold, which is I think is quite interesting as well, is that geopolitical tensions and just the uncertainty of the outcome of these negotiations, not just in trade but everything else, is also drawing investors to be more conservative and increase their gold allocations. So those are the three main factors driving gold prices higher. Some people call it quantitative failure. I just think that's kind of another way to refer to it.
Before you walked in, Reuters had a headline that China was partially easing restrictions on gold imports. Right. Is China as important to gold as it is to oil?
It is very important. I mean, there's 1.4 billion people in China that have a lot of money in the bank. China's monetary base is bigger than the U.S. monetary base. If Chinese people take money out of their bank accounts and start buying gold, that's certainly a bullish case. We think gold could be under a level of tensions. We could see gold spiking to $2,000 an ounce over the course of the next 18 months.
Where are we now? 1,509. Francisco, thank you.
Thank you very much.
Let's send it over now to Morgan Brennan, get a look at what's coming up on Squawk Alley. Morgan.
Hey, David, that's right. So markets have moved lower in the past hour, and that's being led by losses in both tech and communication stocks. We're going to dig into that. Also, we got a big name from Silicon Valley joining us today, the CEO of Box, Aaron Levy. Big show coming up. Stay tuned.
Payne thinks it makes the rules. But the rules just changed.
If it isn't dead, if it ever comes back, we'll come back to.
On September 6th.
This meeting of the Losers Club has officially begun.
They're back, and so is he.
We didn't stop it. The clown.
Starring James McAvoy and Jessica Chastain.
For 27 years, I dreamt of you.
See how it all ends.
I craved you.
It, Chapter 2.
I missed you.
In cinemas September 6th. Book tickets now, rated 15.
Hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
At Argos, Big Red is on with products you'll want at prices you'll love. Save 20% on thousands of stylish indoor furniture products. Plus, we've got a range of large Hoover appliances, all for £249 or less. With Argos, you're good to go. Conditions apply, subject to availability. Furniture offer ends the 3rd of September. Hoover offer ends the 27th of August.
Make sure you're uni-ready with our huge range of practical essentials and home-from-home comforts and get 10% off for a limited time. T's and C's and exclusions apply. Dunelm, the home of home.
Big show ahead on Closing Bell today. We're going to discuss those Fed rate cut expectations with another key member of the Federal Reserve, Dallas Fed President Robert Kaplan, live from the Fed Summit in Jackson Hole with Steve. All starts at 3 p.m. Eastern. David was okay yesterday, so we invited him back. David Faber joining me, 3 p.m. Squawk Alley up next. In the meantime, Dow's down 70. Don't go away.
See, that's funny. I thought you traded options. I'm not really a Wall Street guy.
At Asda, save 25% on a great range of wines when you mix and match any 6 bottles or more. Bring it home with Asda. Save money, live better. Selected lines in selected stores, 75 centilitre and 1.5 litre bottles, £4 and above, excludes gift sets, fortified and meal deal wines, in store only, excludes Scotland, ends 26th of August 2019, drink aware.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
We've created unlimited data plans for your business because 1 minute you're the receptionist,
Hello, how can I help?
the logistics manager,
Okay, lift at your end. That's it now, to me.
the new business consultant,
Will do. I'll pop over and give you a quote.
and you've still got to make the tea. Your business doesn't have limits, so why should your data allowance? New unlimited data plans from Vodafone Business. The future is exciting. Ready?
Max download upload speed apply to data. Coverage may vary. Terms at vodafone.co.uk/terms.
This Saturday, there's more to win with Lotto, with thousands of prizes doubled. And this Sunday only, you can use your Lotto event ticket to go to the cinema for free. Nice! The Lotto Double Prize event. Don't miss it. Right, what popcorn to have?
Lotto from the National Lottery. Amazing starts here. See website for event details. Rules apply. Place must be 16 or over. Cinema tickets subject to availability. Redeemable only on August 25th. Selected cinemas only. Full T's and C's apply.
If your old faithful fridge freezer is broken or on the blink again, relax. At AO, we have a huge range jam-packed with the latest technology to keep your weekly favourites fresher than ever. Plus, there's great deals on top brands like Hotpoint and Samsung, with finance options available. AO.com, the online electrical store. AO, let's go! Credit is subject to status, must be over 18. AO Retail Limited is a broker and not a lender. Credit is provided by Secure Trust Bank PLC, trading as V12 Retail Finance.
First world problem number 346.
Well, you know, people might think I'm exaggerating, but since Virgin Atlantic announced their sale, I can't sleep. One minute my head is in New York, the next I'm searching for shows in Vegas. I can't stop. So many choices. South Africa, the Caribbean, California. My search history is a total mess. Oh, I might need to bring it up with my life coach.
Seriously? Get a flight. Bing bong. The Virgin Atlantic sale is now on. Visit virginatlantic.com and fly direct from London.
Good Thursday morning. It is 9 a.m. in Jackson Hole, Wyoming. It's 11 a.m. on Wall Street, and Squawk on the Street is live. Squawk Alley is live. Good Thursday morning. Welcome to Squawk Alley. I'm Carl Quintanilla here with Morgan Brennan at Post 9 of the New York Stock Exchange. John Ford has the morning off. Obviously, markets have lost some gains here as all eyes are turning to Jackson Hole. That's where we're going to begin this morning. Our Steve Leisman is there as the Kansas City Fed's annual two-day economic policy symposium kicks off. Hey, Steve.
Hey, Carl, I'm just looking at something here. This is from our icon. I guess it's Refinitiv now, we call it. But the September Fed Fund futures has now flipped from a small probability of a 50 basis point cut in September to a small probability the Fed remains on hold. Just to be clear, a 98% probability that the Fed does cut by a quarter, but it was like a 2% probability of a 50 basis point cut. Now it's a 2% probability the Fed remains on hold in September. Maybe some of that coming from the sort of hawkish talk or less dovish talk we've gotten from two Federal Reserve officials here in Jackson Hole so far. And I say so far because there's a lot yet to come. I'll get to that in a second. Now, before we get to that, I just want to show all of this sort of emphasizes the challenge of Federal Reserve Chairman Jerome Powell, who on the one hand has a market screaming for rate cuts, or at least it has been for most of the past couple of weeks, a couple months even, a president screaming for it, and yet a board that's a little more reluctant to cut rates than perhaps the market wants. Here is Philadelphia Federal Reserve President Patrick Harker in just the past hour talking about where he thinks interest rates ought to go.
I didn't think the cut was appropriate necessarily, but I went along with it to get back to neutral. But I'm on hold right now. My forecast is just to hold where we are for one of the reasons is that I think we run the risk of creating too much leverage in the economy.
Esther George, who is the host here, the Kansas City Federal Reserve, puts this symposium on every year. We got to talk to her. We talked about it this morning. And Esther George is a person who also, she dissented from the rate cut, and she doesn't think the Fed ought to go anymore. And part of her reason is because she sees the economy being pretty good.
My sense was we've added accommodation,
right.
And it wasn't required in my view. So I'm observing the downside risk, and right now I'm really focused on what the Federal Reserve has to do to achieve its mandates. And in my view, with this very low unemployment rate, with wages rising, with the inflation rate staying close to the Fed's target, I think we're in a good place relative to the mandates that we're asked to achieve.
Of course, you have the president this morning talking about how German interest rates are negative. And I asked both Federal Reserve presidents about that, and they don't really see that should have a major effect. Not no effect, but they don't see it has a determinative or major effect on where the U.S. should put its rates. They both point out that U.S. growth is stronger and inflation stronger than it is in Europe. We're going to get a chance to talk to several other officials. Today at 3 o'clock, we have Robert Kaplan coming on, the Dallas Federal Reserve president. Tomorrow morning, we'll have the keynote speech from Federal Reserve Chairman Jay Powell. And then later, also that morning, we have Loretta Mester and James Bullard. Jita Gopinath, the IMF chief economist, so key because global economic weakness is one of the major issues out there. And then I can tell you now that at 5 o'clock or 5:30 tomorrow afternoon, we're going to sit down with the Bank of England Governor Mark Carney. Carl?
Steve, I know obviously Powell is the main event, but do you expect Bullard's comments to offset or be markedly different from what George and and Hartgrove said today.
Well, I think Jim is one who wants to do additional rate cuts, and I think it's worthwhile for everybody to, take a step back and say, wait a second. There's a lot of commentary to come. It's one of the great things about Jackson Hole is that all these presidents do speak, and we get a snapshot in time of how the Federal Reserve feels about things, and you get an idea of the challenges facing Jerome Powell, where there's not everybody on the same playbook. Where it seems like Powell's a little more oriented towards taking insurance cuts out, whereas some of these other members are not. So Bullard may be a person who is a little bit more on the side of where Powell wants to be, and we'll see how things develop. Ultimately, I think it's the data that's going to determine what the Federal Reserve does in September. We'll have a jobs report, have a better idea where third quarter GDP is headed. Right now, Carl, it's above 2%, and all the Fed officials we talk to that say we don't need to cut rates, they say, hey, 2% was our forecast. 2% is potential growth of the economy, and 2% is the number that we're running right now. Where's the need to cut rates?
Yeah, Steve, this idea of too much leverage, this idea of the downside risk of easing and easing too much too fast that has come up in your interviews this morning. How should investors be thinking about that? And I guess what's the assessment? How would that show up in the data if that were to happen, if you were to have the Fed cut and that were to be the result?
Right. So, I mean, every person who takes economics, probably, depending upon how much attention they were paying in college, walks away with maybe just one line in their head, that there's no free lunch. If there was a free lunch, we'd have zero interest rates, we'd all go negative forever, and there'd be no reason to have a positive interest rate. Well, one of the reasons why you want to do that is because you don't create excess leverage. Companies that don't deserve money, don't get money, but companies that cannot service their debt would otherwise go out of business. That's part of a healthy economy. And so there's concern about that. And I think the Fed knows they're not real good at pointing out these bubbles and knowing these bubbles ahead of time. It's why, going back to Fed Chairman Alan Greenspan, it's been essentially the MO of the Fed to address bubbles once they pop and not to try to find them beforehand. Now, that's changed post-Dodd-Frank, where they try to identify bubbles more, but that's really never been proven yet. It's just an idea that's out there in the new regulations that exist, Morgan. So I wouldn't necessarily hang my hat on the ability of the Fed to find these bubbles. One thing they just say is, you know what? Let's not have a crazy low interest rate to keep away from these type of bubbles.
Steve Leisman, great stuff so far. We're looking forward to the rest of your interviews, this star-studded lineup over the next 2 days. Thank you. For more on the Fed, let's bring in Oppenheimer's Chief Investment Strategist, John Stoltzfus, as well as Mark Heppenstall, CIO of Penn Mutual Asset Management. Good morning to you both. John, I'll start with you. Your expectations from the Fed chair tomorrow, especially given some of the commentary we've heard so far?
Well, I think what he's likely to say in a Fed that is highly transparent, maybe not quite as much as it was under Bernanke and Yellen, but I think he will say that there is discussion, and I think they're going to be data dependent. I think the fact is we've had good jobs numbers. We've had mixed economic data that sides to the plus side for the economy. The resilience of the markets underscores that as well. Can't help but think there's a real chance here that we might not see a hike in September.
You mean cut?
I'm sorry, a cut. We're so used to saying hike, right?
I totally agree.
It's for decades. Yes. We've always been now it's
at least 1 decade.
It's the counter-inflationary trend that we have to watch. And the thought is that they likely don't need to, based on the economic data so far. And the weakness in manufacturing represents a small part of our economy. I mean, manufacturing is around 12% of our economy versus, other countries. Germany, 47 to 50% of its economy is export-driven, a lot of that tied to manufacturing. So our situation is decidedly different because of very important structural factors.
Mark, do you agree?
Well, I will say, in last year at Jackson Hole, Fed Chair Powell emphasized the importance of inflation expectations in determining monetary policy. And so with inflation priced in by the TIPS market at about 1.5% as far as the eye can see, my leaning is towards a Fed rate cut in September. And I do think this Federal Reserve has shown a hesitancy to surprise investors. So the fact that it's 98% priced in by the markets, to me, is a sign that a cut is likely next month.
John, what is your take on markets here right now, and what would you be, I guess, most aggressively buying, if anything?
Morgan, I'd say the word aggressive will temper somewhat because of the fact that we've got the trade war rolling. But our expectations are that we are going to see a deal in terms of the trade war. We think both the United States and China have big reasons, both from a position of economic growth as well as from pressure that the leaderships are feeling from business and consumer interests in both countries to make a deal. And we think that when that happens, we'll see things turned around. So we are decidedly favoring cyclicals versus defensives, and we've been that way for some time.
Counting on one before the election?
Well, we would hope before the election.
I know, we all hope.
Of course,
yes.
But the thought is here also is just about every day you keep hearing of more companies diversifying their supply chain away from China. Now, China is very big on 5-year plans, and the more time it takes for that to build momentum, and it's not easy. The journal piece about Vietnam, and it's going to take time. But remember that when World War II started, the United States was decidedly unprepared to battle the Axis, and yet within 5 years they defeated Germany.
Mark, how are you positioning yourself, or how are you counseling investors to be positioning themselves right now in this market, especially in the fact that there is all this uncertainty, whether we're talking about the Fed, global economy, trade, all of the above?
Well, I do think there are times to invest more aggressively, and there are other times to be more conservative. And to me, given the heightened level of uncertainty today with, as you mentioned, the trade war with China, the upcoming election, the yield curve and credit markets, which are beginning to flash red in certain areas, to me, err on the side of caution. I will say, though, there's been a real flight to safe haven parts of the equity market, it's utilities in particular. And to me, those are no longer safe haven assets given their valuations today.
John and Mark, thank you for joining us today.
Thanks for having us.
A lot more to come from Jackson Hole, obviously. As Steve said earlier, the IMF's chief economist will join us tomorrow on Squawk Alley. In the meantime, Box CEO Aaron Levy is here at the New York Stock Exchange. We'll check in with him with the Dow down 16.
At Southern New Hampshire University,
there are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
At Argos, Big Red is on with products you'll want at prices you'll love. Save 20% on thousands of stylish indoor furniture products. Plus, we've got a range of large Hoover appliances, all for £249 or less. With Argos, you're good to go. Conditions apply, subject to availability. Furniture offer ends the 3rd of September. Hoover offer ends the 27th of August.
At the Bank of Antandek, they're looking for a mascot.
We need an icon. Something that says high flying to all our mortgage customers.
Like a falcon or a stallion.
Or even better, a parrot. Check it out.
Meanwhile, at Santander, they're concentrating on helping customers find ways to take years off their mortgage with their overpayment calculator. See what's possible at Santander.
All applications are subject to status and our lending criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
G'day.
Hi, it's Paul from Grantham.
Pablo?
When are skinny jeans too skinny?
Before you shrink wrap your valuables,
we want to ask you some questions.
Okay.
Has your voice gone up an octave in the last 5 minutes?
If you put your hands in your pockets, might they get trapped?
Do you feel like you're on a TV show called When Denim Attacks?
Well, I do feel a bit like that.
You're wearing them now, aren't you, Pablo?
Mm-hmm.
Trust us. If you ever want little Pablos,
you might want to wear something roomier.
I get it, guys. I'm going to change.
Hooroo!
Foster's. Good call.
Drinkaware.co.uk for the facts.
Point for big tech, Box is introducing a new feature called Box Shield, a set of tools designed to give users a better sense of what content they're sharing and with whom. Joining us this morning here at Post 9 in a new chair, Box CEO Aaron Levy. Aaron, it's good to have you back.
Hey, good to be here. Thank you.
We talk so much about companies retrenching, saving capital. It's kind of nice to see some innovation and new products. Tell us about it.
Yeah, so at Box, we work with 95,000 companies globally that use our platform to be able to securely share and collaborate on their data both in and outside of their organization. So there's a tremendous amount of content, whether it's banks or life sciences companies, federal agencies that need to be able to share with their customers, their partners, and their supply chain. And so we're advancing the way that companies can handle the security around that data by bringing more intelligence to data security. So if there's anomalies in how content is being accessed or what locations it's being accessed from, or what devices people are accessing their files from, we can alert the security teams of those organizations to be able to identify possible threats in how that work is being done. So Box Shield is our brand new product for that.
So when you say intelligence, artificial intelligence?
Yeah, machine learning that basically maps the regular behavior of that organization or that user and then can alert the security team when there are aberrations in that usage pattern. So it's a breakthrough product for us, and it dramatically enhances the security story for our customers.
Would this be a premium onto what they're already buying, and how much more can you charge?
Yeah, so it is an advanced solution, so we are selling it as an add-on product. However, we just launched an all-new suite of our products, so the ability to bring together workflow, our platform, and this advanced security solution, as well as data governance, all in one solution.
Just to shift gears a little bit here, we've had some analysts on our air recently who have made the suggestion that with all the gangbusters growth we've seen in cloud and cloud spending adoption overall, that maybe potentially we're starting to hit a peak here. How do you think about it?
I think that, I think in some of the latest earnings, obviously, there can be mixed messages around that. When we sort of zoom back and think at, 10,000-foot view, I think we're still in the very early stages of the cloud. If you think about the amount of businesses globally that are still going through digital transformation, the amount of employees that still are going to need to be able to work in a much more modern way, the amount of customer experiences that are still left to be transformed in every industry, from the signals we're seeing from our customer base, we're still in the early innings of cloud transformation. So I think we have years of growth ahead. I don't know the particular growth rate that we'll see. That will obviously always, sort of be dependent on the size of companies and the size of the market. But there's still years and years of transformation left within the enterprise.
We've known you for so long, well before public.
Well before the gray hair.
Well before, yes. Hair was gray, and Box had a ticker symbol. We had a discussion yesterday about what's happening to early funding rounds year on year.
Yeah.
Why is it? What's going on, and does it reflect nervousness in the Valley or not?
I'm sort of seeing the opposite. I think that the funding rounds are getting bigger. I think the earlier stage companies are ending up with larger valuations. I think what we've actually seen from the public market is that there's a tremendous amount of excitement when you look at recent IPOs of Zoom or Slack or others. It was actually showing that the companies were actually misvalued as private companies, where they probably could have even had higher valuations as a private organization. So
if they didn't wait too long.
And so I think that you're still seeing that, companies are trying to find that right balance of when to go public. But frankly, I think when you look at the amount of innovation that's still coming out of both Silicon Valley and then just the tech industry globally, we're still seeing a tremendous amount of upside, and I think that's being represented by the valuations that are actually growing at the earlier stages right now.
What is your sense? We've been talking about this really from a macro level lately, but just business, CEO sentiment, consumer confidence, the fact that there are all these macro uncertainties out there and how it's affecting business spending right now. Have you seen any impact?
I think in terms of direct business spending, particularly in IT and kind of technology spend, we're not seeing much of an impact from a macro standpoint. I think the general volatility of the market, trade wars, tariffs, all of that is I think never a good thing for business. I think you want to be able to sort of rely on what are our global partners going to look like. We want our customer base to be able to do trade globally in a very efficient way. That means that they're going to adopt modern technology to do that trade. So, we would prefer to have a lot less volatility and noise in the market. However, we're not seeing that directly impact IT spending in any particular way yet.
Do companies in the Valley want to sell in China anymore?
I think that the amazing thing about being a software company or an internet company generally is that your reach is and really should be global. The ability to impact every consumer or business around the world is the real opportunity and vision for most startups and software companies. So the ability to do business in China, the ability to do business kind of, all across the world, I think is an important aspect of being a software company.
So there's no sense yet that we're going to enter some kind of digital Cold War and we need to start picking sides?
I think it would be a disaster if we end up in that direction, and I think we should be doing everything possible from a security, a global, a geopolitical standpoint to avoid that. I think these platforms are global by nature. I think we don't want to create a balkanized internet where you're doing business on a kind of per country basis in a very different type of way. I think it would be way better if we can have global policy around cybersecurity, around trade, around data privacy, and these are all massive topics of kind of great importance right now.
A lot of attention has been paid to this dinner last week between President Trump and Apple CEO Tim Cook, and certainly the president coming out saying he's going to figure something out about Apple regarding the tariffs and calling Apple a great American company. What do you think the response to this has been in the Valley? And I guess, do you think that this is a management template that more companies might adopt?
I think in general, it would be great to not have trade issues that are driven by very particular one-off, conversations or organizations issues. I think we should have a global trade policy that makes sense, on behalf of the broader economy. So I think, I think it's fantastic if Apple's been able to make some headway in terms of, educating the administration around what these issues need to look like and how we need to resolve them. But in general, I think that what we would be looking for at Box selling to our customers, and I think what the tech industry generally is looking for is more stability and more long-term thinking around these approaches. And hopefully, Tim was able to make that case, and hopefully we'll see some positive progress on that dimension. And I would just want to, while we're talking about this topic, I think the other issue is that's really important around this is immigration and all the noise around immigration policy. That's not helping America's ability to be innovative and be able to, bring on the best talent. So I think trade, immigration, cybersecurity, privacy, all of these topics are incredibly important for the health of the digital economy, and we do have to kind of work through them.
Right. Chris Sacca had an amazing thread a couple weeks ago about the companies he's worked for and how much they've been driven by the hard work of legal immigrants, right? People who were born in other countries. But who's carrying the water on that front for the industry in Washington, right? Do you guys think you need to speak out more forcefully?
I think there's a lot of conversations around this topic. Unfortunately, they probably don't raise to the same level as some of the other areas that are generating a lot more noise right now. Hopefully in a more maybe stable political environment, we'd be able to have much healthier conversations around talent and education and what's the future of STEM look like and how do we make sure that America is competitive for the next generation of talent. These are the issues that I think every technology company is going to be dealing with for decades to come.
And if you had to rank the conversations that you're having with your peers, do they center around immigration, trade, or antitrust? What's number one?
Probably at dinner, it's antitrust.
Really?
It's the most dramatic and interesting of the topics. But I think that sort of this idea of how do you regulate big tech? How do we think about whether it's breaking up properties or just ensuring better cybersecurity and better data privacy practices from a regulatory standpoint? These are absolutely very active topics right now in the Valley.
Does big tech need to be regulated or reined in some form or fashion?
I think all tech needs to be regulated in some fashion. I think this idea of big tech versus small tech is maybe a little bit of a red herring. I think that we need to be able to have practices and standards around data privacy and the protection of both consumer and enterprise data. I think this is no more of an issue for big tech as it is any kind of small startup. And I think these are going to be really, really interesting issues that need to be resolved in the next few years, or else both consumers and businesses aren't going to be able to place their trust in these platforms. So I think when you look at what Apple is talking about around encryption, what you think about Salesforce or Amazon or Microsoft on data security, what we're focused on with Box Shield and other security products, hopefully this is a little bit of a view into where the direction of the industry can go, where customers can control their data, what's happening to your information, you have the ability to revoke access to that data. These are going to be, I think, important principles and rights of any user on these internet platforms in the future.
Trust is a big theme, going to be a big theme. It's great seeing you.
Cool, good to see you. I'll have more gray hair next time. Thank you.
Here, Levy.
Well, the Dow is coming off its fourth positive session in 5, but we're back in the red right now, though just barely, down about 8 points. Here are the names that are trying to turn things around today. Boeing, JP Morgan, and Goldman are all in the green. We're back in a moment.
Fidelity is redefining value.
There are certain things in life we simply don't talk about, and hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Live big and spend less on the brands you adore, and dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way, and give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
Make sure you're uni-ready with our huge range of practical essentials and home-from-home comforts, and get 10% off for a limited time. T's and C's and exclusions apply. Dunelm, the home of homes.
Phew! Currys PC World Mega Deals are hot stuff. You can save up to £150 on Samsung fridge freezers, all with a soothing 5-year guarantee. Starting from just $379 for the RB29. Or upgrade to an American-style model with £150 off the RS8000 and chill in the heat with its water and ice dispenser. A hot mega deal for a cool $9.99 at Currys PC World.
G'day. Hi, it's Paul from Grantham.
Pablo?
When are skinny jeans too skinny?
Before you shrink wrap your valuables,
we want to ask you some questions.
Okay.
Has your voice gone up an octave in the last 5 minutes?
If you put your hands in your pockets, might they get trapped?
Do you feel like you're on a TV show called When Denim Attacks?
Well, I do feel a bit like that.
You're wearing them now, aren't you, Pablo?
Mm-hmm.
Trust us. If you ever want little Pablos...
You might want to wear something roomier.
I get it, guys. I'm going to change.
Hooroo!
Foster's. Good call.
Drinkaware.co.uk for the facts.
More choice.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
European market's going to close in a few minutes here. Seema Modi's got a breakdown of today's action overseas. Hi, Seema.
Hi, Carl. A negative session for European markets with the exception of Spain, which is higher just fractionally on the day. What's also getting a lot of attention is the British pound spiking to a 3-week high after German Chancellor Angela Merkel said a solution to the border with Ireland is possible before the looming October 31st Brexit deadline. UK Prime Minister Boris Johnson is actually set to meet Merkel later tonight, so we'll see what type of influence she can have on the larger Brexit topic. Meantime, a mixed picture for European manufacturing. France's industrial sector unexpectedly returning to growth this month, but the bleak outlook continues in Germany. The headline manufacturing PMI beat forecasts, but still contracted for a 7th consecutive month. Factory orders falling the most in more than 6 years, and it comes as minutes from the European Central Bank's latest meeting were released, showing that the central bank is considering a number of options, including lower rates and targeted asset purchases. JP Morgan's European team, they're expecting the ECB to unveil a 10 basis point rate cut and a 30 billion euro quantitative easing package per month plan to be announced in the September meeting. So it's not just the Fed that we're focused on, the ECB as well in the next policy meeting in September. Morgan, back to you.
Absolutely, Seema. Thank you. Let's get over to Sue Herrera now for a news update. Hey, Sue.
Hello, Morgan. Hello, everyone. Here's what's happening at this hour. South Korea's Deputy National Security Advisor says he expects U.S.-North Korea talks to unfold soon and go well. His comments came after meeting with U.S. envoy Stephen Begun in Seoul, but a North Korean spokesman says a recent U.S. cruise missile test and plans to deploy F-35 jets around the Korean peninsula were, quote, dangerous. Iranian President Rouhani says talks are useless as Tehran's nuclear deal with the world powers crumbles further. In a speech today, he said Iran's enemies do not accept logic, so they cannot respond with logic. High school students rallied in downtown Hong Kong to call for political reforms. Hundreds of teenagers wearing black and holding umbrellas in the oppressive heat turned out for the rally. Reports of severe lung disease linked to vaping continue to rise. According to the CDC, there are 153 possible cases in 16 states. The illness initially looks like a bad respiratory infection, but it does not get better with normal treatment. You are up to date. That's the news update this hour. Back downtown to Squawk Alley. Morgan, back to you.
Sue Herrera, thank you. When we return, a masterpiece of obfuscation. That's what one Wall Street analyst is calling WeWork's coming IPO. We're going to discuss that after the break. And later, why Tesla's largest shareholder outside of Elon Musk thinks he should step down as CEO. Squawk Alley returns in less than 3.
Every day, visionaries are creating the future.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
Dad, I'm bored.
Why don't you go and start your holiday homework?
Don't worry, this summer we've got loads of exciting activity ideas to keep the kids entertained without even having to leave London. Make the most of the sunshine and go race paper boats, pick wildflowers, or make a rocket pack out of a cereal box. Look online for Asda Tour de Fun for even more exciting activity ideas. Go discover your fun side with Asda.
Phew! Curry's VC World Mega Deals are hot stuff. You can save up to £150 on Samsung fridge freezers, all with a soothing 5-year guarantee. Starting from just $379 for the RB29. Or upgrade to an American-style model with £150 off the RS8000. And chill in the heat with its water and ice dispenser. A hot mega deal for a cool $9.99 at Curry's PC World.
G'day.
Hi, it's Paul from Grantham.
Pablo?
When are skinny jeans too skinny?
Before you shrink wrap your valuables...
We want to ask you some questions.
Okay.
Has your voice gone up an octave in the last 5 minutes?
If you put your hands in your pockets, might they get trapped?
Do you feel like you're on a TV show called When Denim Attacks?
Well, I do feel a bit like that.
You're wearing them now, aren't you, Pablo?
Mm-hmm.
Trust us, if you ever want little Pablos...
You might want to wear something roomier.
I get it, guys. I'm going to change.
Hooroo!
Foster's. Good call.
Drinkaware.co.uk for the facts.
Daddy, you know my birthday party?
Yes.
Can we do painting?
Of course.
And can we have fireworks?
Absolutely.
And can everyone in year 4 come?
The more the merrier.
You're very relaxed about this.
At John Lewis Finance, we've crafted our premier home insurance with real care, so it provides accidental damage cover for those unexpected mishaps. We're also a Which recommended provider for Home Insurance 2019. Find out more at johnlewisfinance.com. Home insurance from John Lewis Finance. Excess and exclusions apply.
Welcome back to Squawk Alley. 2 stories to get to on Tesla, both out of Germany. Phil LeBeau is in Chicago with more. Hey, Phil.
Hey, Morgan, no shortage of news when it comes to Tesla today. And the stocks, while it moved earlier today, they are not moving as much now. Let's begin first off with the second largest investor in Tesla. That is Bailey Gifford. Well, there is a report out of Germany today where some of the leadership of Bailey Gifford questioned whether or not Elon Musk should remain as CEO of Tesla, essentially saying, look, is the company better served if he's not there day to day and some of the volatility that goes along with Elon Musk being CEO? We've reached out to Tesla for a comment on this. They have said nothing, but when you look at Elon Musk, he's not stepping down as CEO. This is his company. There is no suggestion at all. There is no indication at all from anybody I've talked with in leadership at Tesla that Elon Musk will step down as CEO. And the other story also coming out of Germany is a report that the VW CEO, Herbert Diess, might be interested in Volkswagen taking a stake in Tesla. That report earlier today said that Diess is interested in Tesla's software and batteries. We did finally get a comment from Volkswagen, which almost immediately shot down this report. Officially, the company says the media speculation about a Volkswagen investment in Tesla is unfounded. So Tesla shares have not been as volatile over the last hour, guys, as those two reports have come out. And essentially, people have looked at them and said, nothing's really changing here when it comes to Tesla.
Phil LeBeau, thank you. We got a lot to unpack there. Let's bring in Business Insider founder and CEO and editorial director Henry Blodgett, who joins us here at Post 9. Henry, great to have you.
Thank you.
All right, let's unpack it. What do you think of these reports? I mean, it was just over a year ago that we were talking about the possibility, thanks to that tweet from Elon Musk about Tesla going private. I mean, stock's down more than 30% over the past year.
And flat for 5 years.
Yep.
This is no longer this big growth story that everybody's got to jump on. It's the future. It is a company that needs to work from, yes, we did the amazing thing and created the first successful car company in, 75 years, to now we're going to be a profitable, steady company that you can rely on. And the problem is that the story changes constantly. The messaging is never permanent. Every quarter, it's now we're going to be profitable. Now we're going to try to be profitable. What they need is somebody who is highly visible, who is basically just handling the operations of the company, in my view. And you go back to Apple, Steve Jobs had Tim Cook, even before Steve Jobs left. Tim Cook was a master at producing devices. Everybody knew who he was. Everybody knew who the rest of the management team was. At Tesla, it's still just Elon. And this is a huge company. So even if he stays CEO, he can do whatever he wants, doesn't actually have to do anything. You need to build up more folks on the management team who investors know and trust and who are consistent and who deliver on what they say they're going to deliver on.
You've been saying this for years, right? Yeah. He needs a strong number two. But I don't hear you saying that another large player like Volkswagen might be interested in buying it at this stage of maturity.
Well, buying it. I mean, they want to invest. It's not... Volkswagen presumably has a huge chunk of cash, stick some into Tesla, you get a nice look at the batteries and the EV development. Strategically, why not take a look at that? That's not a big deal. Buying the company would be a different thing. I don't think anybody was speculating about that.
Why do you think there isn't, I guess, sort of a bigger, more prominent circle of management or executives around Elon Musk at Tesla? I mean, he has it at SpaceX, right? Why not Tesla?
Well, I think it's a very good question. And I think part of it is that the story keeps changing all the time. And I think that it's a red flag not to have some just seriously experienced people who can come in and talk to their prior car making experience and the financial experience that goes into that and just say, look, we're going to build the controls into place and the consistency that you deserve being a shareholder of a company of this size and scale, and it wants to be a car company for the next 100 years.
I think the other thing that sort of catches my attention in all of this, we talk so much about dual class share structure and how many companies, including companies that are now going public, that have implemented them to basically keep their founders in place. Tesla doesn't actually have that. Now, I know he has a supermajority vote requirement that gives him veto power over shareholder proposals, but he doesn't actually have that dual class structure. Do you think that's something that Tesla would ever think about, revisit, reconsider, or need to?
I think it's too late now. I don't think he needs it, and I don't think anybody smart is suggesting that Elon should leave Tesla. I think that would be bad. He is extraordinarily gifted at doing things that most people think are impossible. He's an incredible visionary. He should definitely stay involved. It's just the question of whether he should be spending most of his time figuring out how to make cars profitably. And the companies at a scale, well, they really need that. Somebody who's great at it to do it full time.
Yeah, let's move on to WeWork.
Oh, there we go.
Because we have seen a slew of negative headlines out this week on the coming IPO, including from our friend Scott Galloway in Business Insider, who wrote, quote, any analyst who believes WeWork is over $10 billion is lying, stupid, or both.
Scott always never wanted to pull punches. But I was surprised in that quote that he said, hey, it's worth $10 billion. Now, 10 years ago, if you'd said a little real estate startup was going to be worth $10 billion and go public, you'd say, wow, what a tremendous success. And he's not saying it's worthless. So, hey, maybe it's not 100% downside in the stock. So I actually thought there were some positive things in his otherwise scathing assessment of the company.
What'd you make of the S1, and specifically this contribution margin where they basically exclude every recurring cost?
Earnings before cost.
To get in the black.
Look, WeWork is a story. And you look at the S1, that's like just radiates story right from the first sentence. There's no question that they are where they are because of the power of that storytelling. And I say, we are a customer. They do sell a service that people will pay for. They are helpful. We have a lot of flexible office space everywhere. Our folks are happily working in WeWorks. So there is something there. They're doing it, but it is a real estate company. The idea as a tech company is just insane. And the fact that people are debating that shows you just how good they are at telling a story.
So unlike Uber, where it is a tech story, you need the software, you need the access to the phone, anybody can do this?
It's not that, there are many companies that do this. You take a building and you chop it up and you re-rent it to people. It's not a complicated business. And WeWork does have a little veneer of cool stuff on that. They're more flexible. It is cooler. I rented a Regus office a few years ago. It's not as cool. I wish that a WeWork office had been available. I could work with the hipsters and so forth. So they've got that. But this idea that they are now just completely impregnable going into a recession, they're going to be totally fine. Give me a break. Companies come back on office space, and people stop looking for office space, and they're going to get hammered if we go into that.
I think that's a key point because, in the prospectus, they basically use the word tech company. They use the word technology, I think, 110 times in the filing. So that is definitely the story they're looking to tell. But the key question here is if it's not a tech story, if it's not actually technically a disruptor, then how does it get valued by the market when it does go public?
Right. And we have seen with Uber and others that there is a limit to the market just saying, oh, yes, sign us up, buy, stock's going to go to the moon. People who were not cautious about bidding for Uber got hosed in the IPO, and this could certainly happen. And again, I was actually going back to Scott Galloway. Look, it is worth something, and it is. It's a good service, but it is a real estate company that uses technology.
Finally, is there the counter-cyclicality thing, is that legit? Where if we do go into a recession, you would go to WeWork rather than buy real estate outright?
You might, but everybody will be cutting back on office space. It happens in every recession. Every office space vendor of any kind will be reducing prices to induce people to pay. And as a more strapped than normal business operator, you're going to go. Cost is very important. So sure, if WeWork says, hey, we'll do it for 50% less than everybody else, sure, their offices will be full, but then they will be getting creamed on their leases unless they have some huge pricing power on the leasing side, and we haven't seen that yet.
Henry, thank you for joining us here.
Great to see you.
Obviously, a little bit of churn here. Dow's made its way back into the green as the market tries to digest some of the hawkish commentary we've gotten out of Jackson Hole this morning. Two big earnings movers to get to in retail. We'll do that with Dix and Nordstrom. But Rick Santelli, what are you watching?
Of course, I'm watching what's going on in interest rates globally and thinking about Jackson Hole with the notion context matters. Why? After the break.
Family taco night is a heartburn night you can plan for.
Hemorrhoids. You talk to your GP, but you don't really get anywhere because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime, and the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike, and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet, and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
At Argos, Big Red is on with products you'll want at prices you'll love. Save 20% on thousands of stylish indoor furniture products. Plus, we've got a range of large Hoover appliances, all for £249 or less. With Argos, you get to go. Conditions apply, subject to availability. Furniture offer ends the 3rd of September. Hoover offer ends the 27th of August.
Everyone wants a smooth running home so that they can spend more time enjoying it. The British Gas app allows you to do just that, because with the touch of a finger, you could quickly pay your bill or book in a boiler service, leaving you more time to fire up the barbecue or just relax with a good book. Manage your home account and more all in one place. Download the British Gas app from the App Store or Google Play today.
Report at the top of the hour, a U-turn for stocks. Fresh fears about whether the Fed will continue cutting rates. Is the street setting up, though, for a big letdown? How to trade it from here? And Apple shares up 10% in just the past 2 weeks. What the tech giant may be preparing to unveil. And this stock, it's down 20% in the past 2 months, but it just got a huge upgrade. It is our call of the day. We'll discuss that and much more at the top of the hour on the Halftime Report. Carl.
All right, Melissa, we'll see you in a bit. Melissa Lee. Let's get to Rick Santelli and get the Santelli Exchange this morning. Hey, Rick.
Hi, Carl. You know, Jackson Hole has to be 100%, 110% totally preoccupied with all the strange things going on in the world. And yes, the inversion, the yield curve inversion, this has just gotten to monumental proportions. And I understand. And I also understand that should it invert more and much of the rest of the curve invert more than the flatness it already has, indeed, there could be a recession. But that isn't the danger. The danger is making this a poster child for you must have a recession. And I'll tell you why. Because an inverted yield curve is easy as pie, right? And I'm not saying pie like you eat. I'm saying pie right. Fool's gold. Because context matters. And I'll tell you why it matters. Because in Jackson Hole, hopefully they're discussing all the issues. And believe me, there are a lot of global problems that are getting exported here, and it is affecting us. But trade is affecting us, and it's affecting us because it's the policy of the current administration to go after it. So it's a variable that the Fed really shouldn't neutralize. If this isn't a good thing for the country, then the next election, vote out the administration. I get all that. But context matters. To talk about this inversion and ignore the elephant in the room, the herd of elephants in the room with regard to negative rates, think about it this way. We have inversions and we have subversions. We may have inversions, but Europe, Japan, they have subversions. Negative rates, but yet look at the European yield curve. It's at positive 22. It's a positive 22 with a minus 86 2-year shots and a minus 64 10-year boon. What? That is a better prescription for their economy? Context matters. And with regard to what is at the end game if we slow, and we do go into recession. Recession has been turned into Hades to the 50th power. But I don't think that's the way it should be. And I think in many ways, Alan Greenspan, by trying to take out recessions, a noble endeavor, ended up with a notion that the cleansing process has been removed from the system. If you look at all the policies and all the negative rates and all the strangeness that's gone on, inversions, subversions against the normal financial rules of the road, what you end up with is toxicity that keeps building and building. So the equity markets are right to be a bit frightened. This toxicity has never been purged from the system, and a recession would do that. But a recession also could pull the legs out of the stock market because maybe it's built on some of this toxicity and how it was addressed, the policies that tried to address it. Today, Germany says, don't look for any fiscal stimulus. It doesn't really make sense, but it is the cards everybody's dealt. And I certainly hope that in Jackson Hole, they start to think outside the box a bit, because it's really, really easy to make everything pyrite, but in the end, fool's gold isn't the real deal. Morgan, back to you.
Rick Santelli, thank you. When we return, why and how the office items you interact with on a daily basis, from the phone to the printer, can be hacked. A CNBC investigation after the break. Dow's down 9, the S&P is down 9 as well. Stay with us.
What do you look for when you trade?
I want free access to research.
Yep, TD Ameritrade's got that.
Free access to every platform.
Yeah, that too.
I don't want any trade minimums.
Yeah, I totally agree. They don't have any of those.
I want to know what I'm paying up front.
Yes, absolutely.
Do you just say yes to everything?
Well, I say no to kale. Yeah, they say if you blanch it, it's better, but that seems like a lot of work.
No hidden fees, no platform fees, no trade minimums. And yes, it's all at one low price. TD Ameritrade.
Stand up if you are first-generation college student. Stand up if you're a mother. If you are actively deployed, a veteran, or you're in a military family, please stand. I will tell you this, Southern New Hampshire University can change the whole trajectory of your life.
Most homeowners draw a blank when asked what their home projects should cost. That's why at Home Advisor, you can see what others paid for similar jobs in your area. Start your next home project knowing what